Welcome to Trading Lounge and the Commodities report. We'll have a quick look at ETH and then Bitcoin, and then we'll go into the yields and the bonds and the dollar and gold and commodities. And with ETH here, we can look at from the low here, we can look at it as 1 and 2. And 1 and 2 in Elliott terms. So we're going also here now, we're going up for wave 1 and back for wave 2. So we could pretty much expect that to head on up to the 2,000 US dollar mark and then pull back for wave 2 at that point. And yeah, so 1 and 2 and 1 and 2 and 1 and 2. At the same time, this can also be viewed as a corrective pattern as an A, B, C for the big A wave here, and A, B, C for the big B wave here, and then 5 waves up, further up yonder here for a wave C at that point as a corrective move into the 50% retracement level, and Bitcoin would be in the same boat, taking it up to 50,000. So the whole move up can be corrective. So it may all sort of move up into the hype of Bitcoin becoming ETFs, and then they may ban it at that point. I mean, who knows? So anything is possible. But apart from that, the fundamentals are good, and we could stay on the positive side and look at it as 1 and 2. And 1 and 2 here, and then we can see that you've got 1 and 2 and 3 and 4 here, 1, 2, 3, 4, 5. So there's a little bit more to go here. Then there'll be a pullback at that point. We'll focus in on that pullback so we can get you in on a good trade to the upside. Then on Bitcoin here, just staying on the previous low at this particular point, we're looking at wave 1 and 2 and 1 and 2 here. So blue wave 2 popped in here. Right, and that should take us all the way up to 40,000 without too much problem, as I mentioned before. So we've got wave 1 here in orange, which is minor degree, and wave 2 here, and then going all the way up here for 3, and then 4 here, and then going up for 5 at that point. Between 2 and 3, we're looking for 5 waves in blue, 1 and 2, and 3 and 4 and 5. And between blue wave 2 and blue wave 3 here, we're looking for 5 waves in green. It's a little bit messy, but 1 and 2 here, and then 3, 4 and 5 at that point. So between wave 2 here and wave 3 in green, we're also looking for 5 waves of 1 and 2 and 3 and 4 and 5 here. So yeah, look, there's not a, as I mentioned before, after a big event, everybody needs to go into recovery. So that's what the market's doing in wave 4. And yeah, look, it's popped its head above the 35. So in terms of the trading levels from 30 to 40, we got the Fibonacci numbers as a price ratio of 1, 2, 3, 5, and 8. And then when we talk about 8, we talk about group 2. So the 65 number here, in this case 36,500. So that will act as a bit of a ceiling there, but eventually move through. So the wave 4 got a little bit complicated here, but I was looking at it as an A, B, and C for the A wave, and then a B wave, and we got 5 waves here. That's why I've got this as an A and a B and a C. Other folks and other people may have this as wave 5 over here, and it wouldn't be the first time that I'm wrong, and you could have wave 3 over here, but it just doesn't give me a nice corrective move here unless we're going to get some other move down here. If we do get a move down here, we could look at this as an A wave, a B wave, an A wave, an ABC for the B wave, and then a move down here. And then we could put wave 4 over here, so that the drama continues at that point, So it could play out that way. It doesn't really matter. We're still going to go we're still going to go up. That's the main point. Okay, so it can be viewed in 2 different ways, but both ways are bullish. So that's all good at this point. But I will just put this here, and I will just put this over here as an alternative, and we can talk about it later. So yeah, I mean, either way, we're heading higher, so I'll leave it at that. It's all good. And then we come over to the yields. Now the yields here, we still got another push to the upside here on this, because I can see that in the bond market. and the bonds and the TLTs and the yields are doing pretty much the mirror opposite of each other. So this is a weekly chart. We've got 1, 2, 3, 4, 5. So you can see that we're in the later stages here. I was sort of thinking February and March for a bit of a top in that point there, but of course anything can happen. But I've been counting 5 waves from here to here. I won't go into that at the moment, but the bonds will be doing the opposite, and we'll have a look at the bonds in a moment. But I do want to mention that the bond auctions, the 2 years, the 10 years are on today, and the 30 years on Thursday. Normally I don't sort of worry about them too much, but there's a lot of short covering going on in the bond market. Here we can see all this volume come in through here, but I do see this move up here as a corrective pattern. We still need another move down here as well. But if those it'll be interesting to see how those 10 years, if those auctions get sold out, or they're just not, you know, I mean, treasuries, bonds, whatever you want to call them, they're all government debt, and you know, are people buying government debt? I do believe that they will, you know, but it's quite typical to see this sort of volume sort of come in and, at lows, but sometimes it's normally, if I can just take when we've got sort of Elliott structure coming down here, it's normally a lot of volume coming in on the third wave here, and then that sort of peters out here, because the big people that buy, the big fish, they normally buy at a certain price across the board, you know, within a range. So here, they won't buy up here again because they know that it'll fall back. So they buy here, they'll buy here, they'll buy over here again, and you know, they'll buy across a price point within a range across time. That's what I sort of see based on volume. So yeah, it'll be interesting to see if those 10 years how they get filled today, and how the 30 years, see if anybody's buying that debt. I mean, they will eventually, because you know, well, I just see it, you just sort of see it everywhere, isn't it? You know, it's in the media so much that everybody should be getting that rate right now, but still a little bit more to go on that. This is the 20-year treasuries here. This is my best shot at a count. So the only other thing I can sort of think of here, that I could put wave C over here, but I just don't like spikes on this, but that could go there, but it still wouldn't make any difference, because you would end up putting wave 1 here and wave 2 over here for this, and wave 4 over here, and this would all have to be the third wave here, and the fourth and fifth. So it doesn't really change anything as such, but I'm aware of the possibilities of working a different particular count here for that. But yeah, but in my view, I've got wave 4 here, 1, 2, 3, 4, 5 for 1 and 2, and 1, 2, 3, 4, 5 for 1 and 2, and then 1, 2, 3, 4, and 5 here for this, and 5 waves in this move here. And I'm looking at this as a wave 4 and then a wave 5. So I'm expecting this move to move to the upside here for this, and looking at this as an A wave. If I go from 1 day into 10 ticks, I think I was working on checking this out. Yeah, so this will be this is sort of how I was seeing it here. This is kind of important because you know, the S&P, this is moving with the S&P 500 as well. So if you run this over the S&P, you'll see, and the NASI and that, you'll see it all doing the same. So basically, you know, same with the S&P and that, or the tech stock shares, a push up, and then we're going to see a correction. But in this case, we can just nip out a new low down here for this. So we're looking at this being the A wave here, then an ABC for the B wave, and then 1 and 2, 1, 2, 3, 4, 5 for the third, fourth and fifth up here to make that fourth one. Now wave fours can get a bit more, can get uglier. You know, we could end up with a situation where we come down to here and then we have another move back up here and then we come down. You know, anything, wave fours can get complicated, so just take, you know, we'll just leave the door open for a little while on all of this. But I can see how it's, you know, on an intraday basis it's moving, even on a daily basis now. I mean, it's moving with the stock market. The bonds and the stocks are tuning into each other, and yeah, so we can tie that into the yield and so on. So that's that, and then we come over to the dollar. So it's quite possible the US dollar could have a top in. We're quite close to where we wanted to be up here, but I still think we've got the fourth wave here. And we'll still need, currently, if I've got this as 1 and 2 here, then this is the 38.2% retracement level. We can see the stochastics coming back. So I'm still looking for one more move up here with that. But we'll see how we go. And you know, while this is going on, it's going to put pressure on for the gold and so on. So we can look at gold here. So this is intraday at 20,000 ticks. So we've got all the way up here for wave 1, and then an A, and basically a triangle for wave B. In some of the other markets it looks much better as a triangle, as an A, B, C, D, E over here, and then coming down for wave 2. So we've been tracking 5 waves to the upside here as wave 1. It's all going pretty well at this point. In terms of a 5-wave structure up here, a little bit messy in this little point here. And then we started to notice that this top from here had 5 waves moving down, so we're looking for an ABC pattern. I just wanted to have a look at this bigger picture here first. So as you know, with Elliott, if we've got wave 1 here, then it's possible to have this pull back to the 50-60% over here. Now, will that be the case or won't that be the case? All of those sorts of things, I don't know. It may be that, you know, I've got this here as an A wave at the moment, an A and a B and a C wave coming down here. But what happens if this is like a 3rd wave here, and then a 4th, and then a 5th wave here, then an A and a B and a C wave over here for a bigger B, and then down for the C, and then up at that point? What happens if that plays out, you know? So this would pretty much go here at this point, but the other point could go over here with that. I'm just saying, you know, we knew that we were coming up here. We knew where we were with all of this. I can't remember if we traded any of this or not, but, you know, we haven't been involved in the top or the turn of all of this. And now we just need to be patient and wait to see how this plays out. In the meantime, of course, we can go long above this top, but obviously we're going to get a much better position than that when it comes down to it. So if this comes down here, if this is an A wave and a B wave and a C wave here, then we'll need to look for the first impulse wave to the upside. And when that pulls back, this first 5 waves here, when that pulls back, then we can start building in. We want to get a few positions under the 2,000 and then start building on top of that. So if I go from 20 to 1,000 ticks, I think we got it here somewhere. So it's just, so this is where it can come to the 1,900 here, right? Now, I do need to do a little bit more work on this. So at this stage, you know, we can go long above here, but that's, you know, that's a long way away. So what I was thinking is that the US dollar needs to push up. So while the dollar pushes up, we could probably see this push down. So these 5 waves here, 1, 2, 3, 4, 5 here for the A wave here is what we had. And then we said, well, we should get a B wave in. So we got our 3 waves, a little bit dodgy in here, but no more dodgy than me. And then we need to count down here. Now, I haven't counted this in here just yet, this move here. I'm just assuming this is the 3rd wave, so a bit short on time, so I'll go and check on that. But we're looking for a 4th wave here, and then a 5th wave. Now, if I've made any mistakes, so we could put wave 2 here, but also at the same time, we could put this wave A down over here further. So we get a bigger picture here of 1 and 2 and 3, and that can go up to somewhere up here. So down here for wave 3, 4 and 5 here. So we could get something like this here. Now, if we get to this point here, and this move up here, if it becomes 3 waves, then we'll know that we're coming down. If this move up here is 5 waves, then we can look to build in from that point. So we won't be rushing in. So we'll end up getting 1, 2, 3, 4, 5, something up, something like this. And then we can buy this pullback here. We could buy the pullback here. We can get into the first little impulse wave over here. We can just bring this down into this point, then down into this point, and then we can bring it into the B wave over here. So we can just keep bringing that down. Now, if I've made a mistake in here, I've got some sort of 1, 2, 3, 4, 5 in here, and this is the low, I'd still need to see 5 waves up here. So I'd still need to see a day here as well. So if I've made a mistake and this is wave 1 and 2 and 1 and 2 and building to the upside here, I think it's just an A and a B and 1, 2, 3, 4, 5 going up. But if it's something like this, I will need to see it push up here. Give me something that's going to, give me some, something confident that I can move in on, some 5-wave structure here. So yesterday we were looking for a move down. We've got our move down. Is it finished? Nah, probably not. And could it get any bigger? Yeah, it could do so. We just got to chill, and our 15 minutes will come in due course. This will be the same for, I should do GDX while we're here as well. So GDX is left with 3 waves to the upside here. That's 3 waves here. So that means that there's something else weird going on here. So in this case, we'll have to look at an A and a B and a C wave coming down here, or some other type of pattern. But covering this gap down here is probably something to look at as well. But definitely not getting what we needed, because I was thinking, well, we could get 1, 2, 3, 4 here and 5 up here. But then we saw gold that needed to come down, so it was a bit difficult to get this to go up there, So, yeah, I mean, it could even get uglier, actually. We'll see. Anyway, not a trade there yet, and we're getting, closer. I mean, we've been patient, we knew where we were coming up to here, waiting for a setup, but we needed the top and the turn, and we're getting everything that we wanted here. So we just need to continue to be patient, and we'll be able to jump on that train when ready. So that's that, and this is silver here. So bring that into the fold there a little bit. So I'm thinking much the same thing with the wave. Well, silver's got in the bigger picture, the weekly and the daily and the weekly, it's like it's in a big triangle pattern. That's why I've got wave A here for this and wave B over here. But we could view this as, well, we've had it as wave A, we've had that as wave B. I did have this as a triangle pattern through here, but I don't think that's going to be, it still could be, it could be. We could just have this in 3 ways. But if this moves here, and then moves down here, then we're going to have 5 waves from here to here, and then we'll have 4 waves, and then we'll have this one here, and then we can go at that point. But we still need 5 waves up here, by the way, too. Do you know what I mean? We need a setup at this point to get in, to move in over here, so I won't get too excited at that point. I don't particularly want to buy in the box. I need that. I like the first impulse wave to give me so I can manage my risk reward better. That's what it's about, and the win-loss ratio and all the other numbers have got to kind of dance together. So so let's just see how this plays out. I mean, we had this up here, we're going to bring it down to here, one day we'll bring it to here, and then one day we'll bring it to here, but it's just not, we can't bring the big stick out just yet for that. And over to the base metals. So this has been a bit of a reflection of copper lately in this sort of area through here. Now, this particular move down through here, as I mentioned before, is, well, it's just a bit complicated. It's working in lots of 3s rather than some impulse wave. So what I was waiting for to see if we had this wave E in here, then I needed to really see 5 waves up here, but I'm not getting 5 waves up here. We could look at this as 1 and 2 and 1 and 2 here, and then the 3rd wave here, but it's really fallen out of bed here. So it's kind of giving me a corrective pattern here. So it's more likely that that's not the case, and we need to bring it down here, and we'll need to look at this in some other, I'll just put an ABC here, but you could probably, WXY that till the cows come home, but bring the joker out of the pack, so to speak. But the point being here is that we've just got to continue to be patient. We've got, you know, these swings in the market here that looks like a triangle, and the 50 is the balance point here. But yeah, it's not giving us what we need at this point. So I mean, it could change. Copper is kind of the thing for that. So if we just go to our commodities here, this is copper, this is the futures market. So I can have a look at the daily chart in a moment. I'll put this onto US dollar to a ton here. But see, from this low here, I could count this up as 1, 2, 3, 4, 5 here, right? And this is what I was looking for, an impulse wave. But really, the problem with that is that, you know, this wave 4 here overlaps this, you know, as 1, 2, 3, 4. So it's not really giving me what I want here. So to me, this move up in copper is corrective. It could be an ABC for the A wave, the B wave, and the C wave. This last leg is certainly struggling, and it looks almost like we're getting an impulse wave down here. So, you know, it's not dancing the way that I wanted it to at this point. Oh, this is my bearish count for it. I thought I had a positive count for this. It doesn't really matter. We're not getting what we wanted here. We can't trade BHP at this point with this. So that said, here, that's not looking good. So I do want to have a look at, well, okay, I'll do the uranium thing. So we know with uranium, we've got this big 5-wave structure over here. Then we've got this corrective pattern here. We know this is corrective. Is that top taken out just yet? Close, not there. So this is the next sort of trend starting to the upside here. I don't know if this is the A wave here, and then an A and a B and a C wave for the B wave here, and then we come down for the C wave here. You know, I want to give the worst possible news that I can, and that's it here. Otherwise, we could view this as wave 1 and 2 and 1 and 2 to the upside and continue to move up here. I just don't. I don't know. I'm not. I just doesn't really matter. I mean, any move back, any move at the 25 is a buying opportunity in this larger trend to the upside. So that's, yeah. We just keep an eye on that. That's all good. And before I go to the energy sector, I still just got to have a look at a few things. So first of all, iron ore. So iron ore, this is the Dalian exchange, and we knew that it would be just stalling at the 900 here. So it's doing, you know, it's been here for a week and it's going to be here longer, but the trend is looking sort of positive. So this we'll keep a bit of an eye on this, and because it could help us with Rio and FMG when they pull back, you know. So Rio will be reflecting this, so Rio will be down, and it create a buying opportunity for those markets. So let me just have a look at let me just bring this across here so you can see what I'm doing. So this is the Singapore exchange here, and so this is, we've got this here as a nice A, B, C pattern here. So it gives me hope to be bullish in this market with 1 and 2. And yeah, the thing here is, you know, we've got the Dalian exchange at the 900, so it's going to be, it's not going anywhere. And this seaborne iron ore SGX exchange here has got this double top here as well. So, you know, Rio and Vale and those guys, they're not going anywhere at the moment. So hopefully we can get some sort of pullback in these. We need to do a bit more work in all of this as well. But yeah, so looking good. I think it's going to kind of keep climbing higher, because I know that this counts as 5 waves in this move here, right? This move. And then from this low here, we don't need this noisy thing. So this move here from this low here has got 1, 2, 3, 4, 5 to that point there, right? So there's 5 waves here. So this next move here from here up here is going to be 5 waves. So it's only going to pull back sort of 40-50%, and then it's going to push up here again. So it's not going to come back as much as you think it is in this instance. So I think it's sort of like, if I take it from here, I think it's sort of 1, and there'll be some sort of little ABC correction in there, and then there'll be something here, and then there'll be something here. It's going to kind of, I think it's going to climb sort of up higher on that. So I'm saying this because of Rio and anything else that mirrors this market pretty much directly, you know, so that will be it. But it's always difficult to get through new highs, you know, and then we've got to kind of consider this as wave 1 and 2 here, and then, you know, when this goes above here, it'll probably, you know, want to pull back in a bit deeper in here as well, checking that support in that area there. So don't need to do anything else here. I mean, coffee's doing quite good still in this thing here. You know, we've talked about this ABC thing for coffee here, the A, B and C here. Any soft commodities in the agricultural world will be doing good because they'll be cashing in on the inflation side of things, you know. So is there a ETF? Did I have one for that? I thought I had one here somewhere. Because probably if you can find an ETF on the food side of things, it would probably be quite good. This one, DBA. Yeah, they'll do the trick. Let's have a look at this. Yeah, so you know, it's going to struggle at the top here, and it's got overlapping wave structure, so it's got some issues there. But perhaps we could have a look at that in due course. Okay. Anyway, I'll keep an eye on that. So that kind of covers that sort of base metals area for a moment, and then we come to the energy sector. So yesterday we talked about, you know, we've been talking about things being weak in this sector, especially in the gas, where we could prove it, and you know, the crude oil's coming into this as well now. So we talked about shorting this yesterday. So this needs to be wave 2 up there, otherwise that's going to look a bit stupid. So yeah, I just feel like it needs to come down further now. I mean, now that it's taken out the low here, well, that will be a little bit interesting. Yeah, no, it's pretty good like this, I think. So we'll just leave that. We'll just let it run for a while. You know, when you get moves like this here that drop through the floor here, they like to go through and they like to go back and check it, you know, so just be prepared for that, you know. But otherwise, we'll just keep an eye on it to see how it moves down lower. I may have got this too far down, but we'll see. We'll see how it goes. Rightio. So let's go and have a look at crude. So crude oil, we're looking at it with, it could be more bearish, but an A wave, a B wave, and then we're going down for the C wave here. So in the C wave here, we're looking for 5 waves. We had 5 waves in this move here, so we've had that as 1 and ABC for 2, so that's all good. And yesterday we had this as wave 1. I put the little green men in there just to put them somewhere. Wave 2 here, so 5 waves in here for 1, an A wave, an ABC for the B wave here, and 5 waves up here for the C wave of 2. Wave 1 here is pretty sort of ugly, but I think it's 1 and 2 in here, and then some sort of 3 with an ABC for 4, and then 5. And I could probably tie it into this as well, but yeah, I could probably put this over here. But anyway, I'll just stay with that for the time being. This looks okay with 1, 2, 3, 4, 5 here. So we're coming into this 3rd wave here. There'll be some sort of 4th wave here, and then a 5th wave for this 3rd, 4th, 5th down here. So as you can see, there's, you know, we're entering the middle of the trend at the moment with this, so we'll end up down at $70 down here for that, and maybe further. We'll just see how it stretches itself down. But that's looking for 5 waves from wave B down to wave C. That's crude oil, and then we come over to, what's daisy, you want to leave that on that watch list. And we come to natural gas. So this is a CFD product here. So most of the people in Europe, not all, but many people in Europe and Asia will be using CFD products, and this is a CFD product here. Other folks in the US will be using options and futures and those sorts of things, or ETFs and things. But the reason I'm saying this for is because the CFD created a different top here than the futures market, as I pointed out before. So that sort of solved my problem with that. Let's just go and have a look at that. Let me just bring this back up, and we need to go to the futures market here. So we talked about shorting this yesterday as well below that, so that's triggered in as well. Reasonable volume, but I'll just let it go for a little bit. I don't have 5 waves down from the top here, but that's the top there on the CFDs. It's got that as the top, so we could look at this as 1 and 2. I just got to be careful. This is not going to be an A and a B and a C here. That's what I need to do here. So that could just be this. Just I'm looking at the worst possible scenario, you know. So that would be 1, 2, 3, 4, 5 down here. So an A wave, a B wave, and then a C wave to this point. But we are seeing some nice volume come in, so you know, there's a little bit more than a C wave in this case, and it's a bit sharp for a C wave, so it's looking quite good. So yeah, we call that sort of top in there. And the other thing too, the other reason we're going to be bearish is because of we'll come back to this one. Where's oh, here it is over here. This chart here. So this is the the United States Natural Gas Fund. So yeah, look, it's been having a correction while the futures market's been having a correction, but we could quite easily note that it was a nice A wave, B wave, C wave, and you know, I could see, we talked about this in different ways that it could play out, but a D and an E wave here we talked about yesterday, and looking down as 1, 2, and 3, 4, 5 here. So I'm thinking that you know, it could be a little bit, it could be 1 and it could be slightly different, but you know, it's this. I mean, this is a medium level here, 650. A medium level's halfway between 2 major levels of the Fibonacci numbers, but 5 and 8, and so it's 650 is a bit of an odd number, but I don't need to prove anything, because you can see that it's, you know, it's got some gravity to it at this point. So we call it a large number. So it's quite possible that we could get a bounce. We could look at this as 1, 2, 3, 4, 5 here for 1 and 2, and then 3, 4, 5 here. Now, of course, this could just rally back 50-60% of this and then move down. Then we'll need to look at this as another little wave 1 in here, this type of thing, wave 1 and wave 2 here. Or it could bounce back from this top here into here and come back up a little bit. Well, the bad news is it could come all the way back up here, you know, for a wave 2 to the 50-60%. That's quite possible. So there's you know, I mean, there's 2 things that could go on at that point. So we'll just give it a bit of space to see. I do believe it's corrective, because it does look like this little move here is in 3 waves. So whatever happens here, it's going to be corrective. So we're still to the downside on this. That's the good news. So the direction is quite clear that we need to come down. And as a triangle pattern here, as an A, B, C, D, and E here, that's all good. If I've made a mistake here, the mistake would be that wave D would be over here. And then we still need to go into wave E over here for this. Do you know what I mean? So this wave C here, this will be an A, B, C here for the D wave, and then an A, B, C for the E wave over here. But it doesn't really matter, it's still down. So, but it does make a difference, obviously, if you're trading, that this is just an ETF here, so you'll have CFDs over this or something. But the good news here is that all of this is corrective, right? And in one day, this low will be taken out and will be down at this point at $5. That's how I see it. So the takeaway here is that, yeah, the triangle could get a bit more complicated in here, but the good news is, well, yeah, good news really, gas prices will be coming down further and will be at this point for this particular market anyway, whatever index that is there. So that's good. So we know that it's highly likely bearish. It's highly likely the triangle pattern is finished. So it's highly likely we've got a top in place here, but I can't prove it. That's the issue here. Okay. So on the intraday basis here, 100 ticks. Right. So it comes back to this top here. So on the futures market, we can have this as the top here, because I was always sort of, I couldn't figure out why this would be the top here. It just didn't make it. It just really stunned me. I couldn't figure it out. So we can see, just going back to the futures market here, if we just drop into, say, 2-hour chart or something, or maybe 15 minutes or something. And okay, that's good. Yeah, we talked about shorting this too. So on the futures market, that's the top. On the CFD market, that's the top. So on the futures market here, we could view this down as wave 1 and 2, and 1 and 2, and then I'm going to count this here as 1, 2, 3, 4, 5 for the third wave, fourth wave, and fifth wave here for the third, the fourth, and fifth. So we've got a fair bit to come down here. That the other side of this is that this round circle 1, 2, 3 here, that would be an A and a B and a C wave from that point. So it is possible from this move here that we could go up at that point. It means the triangle pattern on the gas fund would be in play, you know, the E wave on that. So it's possible. It's, you know, it's not out of it. I don't have 5 waves to the downside yet with this. If we do get these 5 waves down as 1 and 2 here, and then 1, 2, 3, 4, 5 here, and we get this 3, 4 and 5 here, wherever the place, then we'll have an ABC pattern over here, and then we'll go down. So if you want to have a safe short position, you can just simply wait until we've got those 5 waves down here, right? And then we can look for the 50, 60% and short it at that point. So don't have to do anything just yet. So it's all going to be about the $3 here, and it's going to get damn messy around here as well, by the by, on the futures market, right? So just be a bit mindful of that. So we've got a bit of work to do here to prove that we can short it over here into this third wave here. That's the size of it. So yeah. Anyway, just piecing it all together. So that's that. And then, so when we come over to here, that's, even though I've got that as the high here on this one, that would be the futures market with 1 and 2 and 1 and 2 here, and then 1, 2, 3, 4, 5 here for the third wave, fourth wave. Don't really need to short these down here because we're going to get a bounce back at this point. So do we have, don't have any 4s and 5s, so basically we'll be looking at this as wave 4, wave 5 coming down here, and then we'll need 3. So we can look at this, just put Humpty Dumpty together. So that will be like that. So if we get this here, this finishing off here, then we can look at the futures market with 5 waves down here. So that means we'll get a bounce off the $3 mark. So just roughly here to here. That will bring us back here. So we can look to short it around the 330 to 340 area. That will be the game plan at that point. What we have to watch out for is that this could be a wave C down at this point, and then we could go up at that point. That's the risky bit at that point. And if that is the case, then we have to look for 5 waves up here somewhere, and then we have to buy the pullback, and then we need to go long again. So don't get lost in being right or wrong or opinions. We just need to trade what we see. On that note, I'll tune out. Thanks for tuning in. Cheers.